You are listening to ChartingWealth.com for Monday, the 9th of November, 2015. Hope this last week was good to you as we saw the market continue to move up as it has done since it crossed over in our two-day trend line back on the 5th of October. However, are there some signs of weakening showing? Well, we're not below the two-day trend line in the total market yet, but we're getting close. We always start our broadcast with IYY, which is an ETF, an exchange-traded fund. The symbol is IYY. It's actually the iShares Dow Jones U.S. Total Market Index Fund. That's a mouthful. It tracks the whole market, so we always take a snapshot on our two-day chart to see what's going on in the whole market. We can see the last 2 days. We've had a down move. Now, it's not a solid red candle like we see in other places, like we saw back starting on the 23rd of October going down to when it bottomed out. Sorry, that's September, down and bottomed out in October on the 1st and then started moving up. But it is a red down candle and what we call an open down candle. That means we need to be cautious. And we can see that the derivative oscillator has lost some of its energy. On our charts, it's always seen as a light green block. Those you watching on video can see it. Those listening, I'm telling you that it has gotten a little bit smaller. And we also see, and I'm telling the folks listening by audio, that our MACD and signal line are getting a little bit close together, still some distance apart. We're still above the two-day trend line, but paying attention to that very, very closely. Now let's drop back to our 4-hour chart, and we can see that we have two down candles for the day. Overall, the market was down 0.14% for the day, still above the two-day trend line, but coming down. Crossed over going down back on the 4th, the morning of the 4th, heading down. So we've got the derivative oscillators rolled over. On the short chart, we're in a down mode. The large chart, not crossed the two-day trend line yet, so the alarm bells aren't going off totally, but we are paying close attention as to a potential sea change in where the total market is. And again, following that Fed announcement a couple of days ago by Yellen. Now let's go to our S&P 500 as shown by SPY. Again, another symbol. It's a SPDR's S&P 500 Trust Series exchange traded fund. It tracks the S&P Standard & Poor 500. It looks a lot like our total chart because a lot of the volume of the total chart's in it, but it's not the same. We see that it has crossed through going down on our two-day trend line. It was down for the day 0.07%, so half of the down movement of the total chart. Now, if we drop to our two-day chart, to our half-day chart, so two of those in a day, what do we see? Well, we see a lot of down movement at the beginning of the day and then a bit of up movement in the afternoon, but still overall down 0.07, so 0.7% down. All right, that's where we are on the S&P 500. We don't see it closing the day on the 4-hour chart below, and that's really what we're going to be paying attention to. So we don't have total alarm bells going off yet, but we are paying attention. Derivative oscillator has lost a lot of its speed, and we see a big divergence on the 4-hour chart between the MACD and the red signal line. So we're going to range back out to our two-day chart, and we're going to go to the Qs. What is the Qs? Well, that is the PowerShares QQQ Trust Series 1. That is the NASDAQ 100. And we see it opening below the two-day trend line. It is a green up candle. It was technically up for the day, 0.08%, so 0.8% up. But we do want to look at that cautiously. Even though it's a green candle up, it has knocked our trend out, so we don't have the same kind of trend that we had going up before. We do see the derivative oscillators lost some of its speed because, again, the market opened lower. So let's look at our 4-hour chart. What do we see there? Well, we see down movement in the morning, a little bit of up movement in the afternoon, and we see that we crossed over going down. We're continuing the acceleration down on this 4-hour chart. And again, it has not yet crossed over. as far as the closing on the 4-day chart on our previous 2-day trend line, but it's getting awfully close. So again, we're cautiously looking not only at the Qs, which is the NASDAQ 100, we're also looking cautiously at the S&P 500 and at the total market. So again, watch. We may have a down move coming on that big chart soon. Now, lastly, what do we always go to? We go to our friend gold. And gold has been good to us if you were in an inverse gold trade, because gold rolled over on the big chart back on the 2nd of November. But we don't pay all that much attention to the big chart when it comes to gold because our 4-hour chart is so good to us. It rolled over going down back on the 19th of October. And it has continued. It slid sideways. It went down, then sort of slid sideways and went up a little bit one day on the 28th. That is on that 2-day chart, rather. I'm sorry, on the 4-hour chart, half a day. It bumped up in the morning on the 28th and then rolled back over and kept going down. And what did it do over the course of the day? It was down 1.46%. So again, some down movement throughout the course of the day. On the 4-hour chart, you can see how it bumped down strong in the morning. Then in the afternoon, it started off a little higher and moved on to about where it had hit in the morning low. So gold was down again for the day, almost 1.5%. So continued big down moves in gold. Derivative oscillators lost some of its downward momentum, and we see just the continued down movement in the MACD and the signal line. So could gold be bottoming out? Well, one day does not make a trend, but we did see it hit the same down point. Now, if we range back on that, do we see anywhere in the past where gold has had any type of floor there? Well, we see it dropping down actually somewhere back in August. We see, and then back on into July, we see gold somewhere bottoming out around 104. So it's, 103.82, 104, something like that. So pay attention. Those bottoms back on those months, we could be seeing those again possibly if gold stops its downward momentum. Sometimes we can find floors. So let's continue to watch for that. But right now, we still have strong downward movement on that 4-hour chart, and we will pay attention to it as we move into the new week. And hopefully you were in a good virtual down trade. And again, remember, we are not a stock calling service. We do not give trading advice. We're an education company. We talk about learning how to invest, how to read a stock chart and make smart decisions. And then once you feel competent with all of the education you have gained, not only here but everywhere else, School of Hard Knocks included, you're ready to then go out and make your own decisions. We do not make them for you. We do not give trading advice ever. Thank you so much for listening. If you don't have our layout that includes this great 4-hour chart for gold that seems prescient, it's worked again and again and again for our virtual trades in this real chart for gold, please ask us for it. You can also get our 15-minute How to Read a Stock Chart video. How do you get both those things for free? All you do is email us cw@chartingwealth.com. We'll send you links to both our charting layout and to our 15-minute, just take you 15 minutes, great video that assists you in learning how to read a stock chart so you can follow us even better every single day. Hope that you had a great weekend as you get into the new trading week, the new investing week. Always follow us on Facebook, Twitter, also Instagram, and YouTube at chartingwealth.com.